Investors and traders, welcome to the channel Market Chart Pattern. Today is 6th of August 2023 and I wish everyone is having a great weekend. In this video, we are going to take a look at the key US stock indices as we always do for this video segment, and this video is for educational purposes only and it is not a financial advice. So guys, what we are looking at is the daily chart of S&P 500 index. So this is the cash market. If you remember, a few weeks ago we had done a video in which we looked at this exact pattern on the S&P 500 cash index. Normally we take a look at the ES, which is the S&P 500 E-mini futures contract. Those work really well for the shorter term side of things, especially if taking a swing trade for a few days. This one is more longer term actual cash market, and one of the key patterns that we had identified was this ABCD pattern, which is a one-to-one projection of this AB swing from the point C. And what we also were looking at was that this point was coming very close to a key Fibonacci level, which is the 78.6% Fibonacci retracement. And what we discussed was that if the market remains strong and this pattern is negated, meaning that market keeps on moving higher quite in a strong fashion, then the chances are more for the market to go higher and in fact be able to take the 4800 level or tackle that level. And on the reverse side of things, if the market actually finds resistance from this region because of the confluence of this pattern formation, then the chances were that the market could in fact begin to rotate lower. So over the course of past few days, particularly the last week, what we have seen is the market has not been able to convincingly take this level out to the upside, and in fact has broken to the downside. And as of last Friday, let me just zoom in a little bit more, we can see this bearish looking candle which took the last Thursday's lows out as well. So what it means is that probably a correction is underway, and it has also broken this a trend line here. It's a micro trend line. Let me try to make it solid so it's a little bit easier to see. Here we go. So it appears to have broken this micro trend line, and the chances for this to rotate lower are increasing because of this pattern formation. Now there's a possibility for some sort of a retracement over the couple of days to maybe 3 days, and it tries to retrace either the 38.2% or even up to 61.8% Fibonacci retracement levels. There is a bit of a gap around here. Fill that one, that remains a possibility. But what we are looking at is that unless these highs of 46.05 are taken out to the upside, there is more probability for this market to rotate lower, and investors and traders should be more cautious on the long side of things. Now, if in fact this scenario begins to play out, what we should be looking at. So longer term, like really long term, we are bullish the market. We have been bullish the market for a very long time, since the beginning of this year pretty much, and while there were several instances where there was a lot of noise in the marketplace, people calling for the market to rotate much lower, we remained on the bullish side of things just because we were watching for this pattern formation that kept us on the long side of the market, and we had been rewarded with that. But now we are also watching this the completion of this pattern, so we need to be more cautious and watch the price action and be more vigilant and careful on the long side of the market. Now, if for example there is going to be a correction, so what are the levels that we should be watching for? So one of the key levels is this 43.25 on the cash market S&P 500 index. This is where we have a structural support coming in from here as well. There was this low here, and if we were to draw a retracement level, then there we go. We also have a 38.2% Fibonacci retracement pretty much comes around this area of around 4,300, roughly speaking, of this CD swing. Now, if this point is taken out to the downside, then the next key level that we are looking for is that perhaps this market could rotate lower to about 4183, and this 4183 is the 38.2% Fibonacci retracement of this entire move ABCD, so which started on the 13th of October 2022 last year. And also the biggest correction has been, or the biggest swing to the downside in this entire one-to-one projection ABCD higher has been of this much magnitude. So if we take this and project it, assuming that this was the high, we don't know yet fully that this is in fact a high, but if we just assume for now, then it also brings us to pretty much this region as well. So we have a confluence of two things coming together: the 38.2% Fibonacci retracement. We also have some structural support coming in from here, and then we have the market symmetry aspect as well. So we'll be paying a really close attention to this level. Should the market get there, the first area to look at is about 4,300 on the S&P 500 cash level. So this is what we are watching in the S&P 500. If the market begins to rotate lower, these are the levels to watch for. Now, let's take a look at the ES. So this is the S&P 500 E-mini futures. Similar kind of picture. This one in fact had broken the 78.6% Fibonacci retracement. We still had some upper target levels which were also met, and now what we are seeing is pretty much like what we have seen in the cash market. This market is also it has broken this micro trend line here. Let's draw this, and the possibilities of a retracement to around this structural high, coming in around structural support, I mean, from this high coming in around 43.15 level. That's possibility. Now let's take a look at the Apple stock. So this is one of these stocks that we like to watch for our video segment, where we look at the key US tech stocks, and this is the one which had met our targets quite a long time ago, and in fact exceeded those targets. We began to be bullish this while the market was trading around here because of certain pattern completions, and also this channel line. The stock market the stock was coming close to this level, so that turned us bullish, and we had several targets which were met and then exceeded. And now what this has done is, look, as of last Friday, this is a pretty bearish looking close, and it has broken this trend line as well, leaving a gap around here. And Apple is one of those stocks which is heavily invested by a lot of big investors, and also it has a fair amount of weightage in the indices as well. And if this stock begins to move either to the upside or the downside, it has a huge impact on those indices, and this could be one of the reasons that we have seen some negative action come in as of last Friday in the S&P 500 index as an example. So we need to pay close attention to the price action happening in Apple. I'll try to do a video perhaps tomorrow about the key US tech stocks that we follow, and we'll cover this in more detail over there in the next video. Now let's take a look at the Qs. So this is the daily chart of the NASDAQ 100 E-mini futures. Here also our targets to the upside were met. We had the 78.6% Fibonacci retracement coming around here. This is the level. This just caused a few days, maybe a week's worth of correction in the market, and then we have seen an expansion to the upside. This is more visible on the weekly chart, which we are going to take a look at. Also, this black line that you see here, it is the 1.618 extension of this AB move. So AB, you multiply this with the 1.618 and you project it from point C, and this is what we get. This is what we got here. Now let me double check this. In fact, I think this was 2.618. I'm gonna double check this one. Let's move to the weekly charts, more visible here. So on the weekly chart, what we see is the 78.6% Fibonacci retracement coming here, the 1.618 expansion of this entire swing from this high to this low come in around 15,810. The market went a little bit above that. Well, in terms of percentage, in terms of points, absolute points is about, more than 100 points. Not able to close above this level, and for the last next 2 weeks, what we have seen a consolidation, and last week the market taking these lows out, and we have got a bearish looking candle. So we need to be watching this pattern as well in the NASDAQ 100. One of the key things that I would like to point out is that NASDAQ or the tech stocks have been the ones which have been leading this market higher this year, and last year they were the ones which were the most impacted and were leading the market to the downside. Now these have been leading the market to the upside, and these indices were also able to reach the 78.6% Fibonacci retracement first, then S&P 500 E-mini futures did that, and then the cash market. So it looks like it's a game of catch up, where the one market has been leading and then the other ones are kind of following it, and now all of these markets are reaching or forming or completing these key patterns that we are looking for. So this is something really important to keep in mind. Now let's take a look at the Dow E-mini futures. So this is Dow E-mini futures. For quite a long time we were anticipating for this ABCD pattern completion and this high taken out, and that finally took place. And now what we are seeing is some sort of rounding top formation taking place after the completion of this pattern, and market breaking above this trading range, and it has taken these lows out of 27th of July and resting right at the 20-day moving average. And on the weekly chart, this is the same pattern, but here we can look at it in a longer time perspective. So this is what it has done, just gone above the 78.6% Fibonacci retracement, quite similar to what the NASDAQ has done. And then last Friday or the last week, we had a bearish close. A little too early to say anything, but we need to be watching the price action really carefully for all of these stock indices. Finally, let's take a look at the Russell 2000. So Russell 2000 has been range bound, and what we have seen is it did a nice ABCD pattern here, then it had a strong correction to the downside, and then it's just been creeping higher after failing to take the lows of 20th of March 2023 out, and it's just now testing the upper boundary of this trading range, which has been going on for quite a long time now. One of the key things to note is that this trading range is in fact just a the lower boundary is just the 50% of its lows of 20th of March. Excuse me, this is a weekly chart, so roughly about 16th to 20th of March, and the highs which came in around 8th of November 2021. So it's just been consolidating around here, but this consolidation has been going on for a very long time now. So these are the key things that we are watching in the US stock market, and one of the key things that we should also be watching is the bond market. So the bond market is much bigger than the US stock market, and it has a huge influence as well, because it's very sensitive to the interest rate movements, and at times even able to foretell what the market is thinking and what kind of impact it could have. So let's take a look at the longer term US Treasury 30-year bond futures chart. This is also known as the long bond, and this is the futures contract of it, because of this duration is 30 years in duration, which is very, very long. So I'm not going to go into too much of its pattern, but we have been watching a bearish symmetry pattern formation, which has in fact capped or kept the market, or capped the rallies at a certain level, and the market has not been able to break out of it. Last week we did a video and we were watching for this level, which was around 124. It happened to be a 61.8% Fibonacci retracement, and if we look to the left hand side, we see some sort of a support structure coming as well. And our thinking was that perhaps this low might be held, because it has held here, and then we had a rally, then it had held here, we had a bit of a rally, the rally failed, and then we had a nice 20th of July Friday, a nice candle, which was bullish candle formation. However, that pattern did not hold, and what happened is, I believe there was a news about the US credit rating downgraded by one notch, and I believe that came in by the Fitch rating agency, but please do Google and find out exactly what the agency was. And what it means is that that actually caused more selling in the Treasury market, and that also had an impact on the stock market as well. And what we have seen as of last Friday is that when it reached these levels around here, which is very close to the bottom of 24th of October 2022, a huge rally in the bond market. To have a rally like this, it means something, that there was a lot of buying which came in, because it's a huge market and it's a pretty strong close to the upside here. It could just be a short covering rally, or it could also be a flight to the quality, which could mean that the stock market goes down, so the money is moving out of stocks, it's going into the bond market, because bond market perceived to be safer in certain circumstances than the stocks, which are privately owned companies, and this happened to be a government-backed instrument. So maybe that might be happening here, and if that's the possibility, then this market could rally a little bit further, maybe a 38.2% Fibonacci retracement, or to even this 20-day moving average here. And this could unfortunately also mean there might be further pain in the stock market if in fact is a rally to the quality, or not, excuse me, not to the quality, to the safety. So let's see which scenario it's going to pan out over the course of next few trading days and weeks. We will also take a look at the 10-year Treasury note, and this is here. This market is in fact bigger than the 30-year Treasury bond market. The 10-year Treasury note market is much bigger, and this is the 10-year Treasury note futures. Here what we see is something similar. It took this low out, this had taken this low out, and there was a rally, and it's very close to the lows around here in this region here, and a very strong close. So again, it could be just either a short covering or a flight to quality. We'll have to wait and see over the course of next few trading days or perhaps weeks. So similar kind of situation to the 30-year Treasury bond. We will be watching the notes market and the bond market, and keep on presenting the key levels that we are watching for in the stock markets and the bond markets of the key markets that we follow for you guys. So thank you very much for watching the video. If you found this video of educational value, please do subscribe to the channel, and if you find that you would like to hear more about when the new videos are posted, then please hit that bell icon button. That way you'll know when the new videos are posted. So thank you very much for watching the video. I wish you good luck and good trading.